Hello traders, welcome to the weekly Forex Focus week 39 review. We'll be looking at the trade setups we started off on the beginning of the week, and also looking at how those trades have panned out, what the setups are looking like. And don't forget, today is NFP day. So traders, this is the biggest news in the Forex market, and we'll be looking to look at the trading setups, trading occasions for which traders may be, cashing in on some of those setups. So let's jump right in on the charts, starting with the review from the economic calendar. Blah, blah, blah. Let's see. Okay, here we started off the week on Monday the 3rd. We saw how the dollar began to lose steam, complete meltdown on the dollar when ISM came out negative. That's the ISM manufacturing PMI came out less than expected, and that saw dollar lose some strength. Anyway, the dollar strength has been in view because we've been expecting some correction. It has been on like on steroids, yeah, just rallying and rallying. So we expected that correction. So when we get to the chart, I'll be explaining to you why I believe the dollar still has more bullish run ahead of it. Now, also on Tuesday, we saw I told you about the Australian dollar, where we said we won't be trading until we see what the Reserve Bank of Australia will be, what their interest rate will be. So it came out less than expected. So I'll show you on the chart how that played out with the United States dollar. Also, the Joe's job opening came out less than expected, so this added more fuel to the meltdown we saw, or the correction we saw in the dollar index. On Wednesday, NZD, the Reserve Bank of New Zealand, also have unchanged interest rate decision on their pairs, and then we began to see some bullish momentum gaining up on the dollar when the ADP non-farm employment change came out positive. So today we have NFP, as everyone has been expecting. We will be looking at what the trade setups are, review of the trade setups we looked at on Monday, and how traders can take advantage of the market and trade these setups. So let's look at the charts, guys. So here we start again with the dollar index, and you can see that massive correction. Now if you look at the overall trade setup or the trend setup, you see the dollar is in a full bullish run here, respecting the trend lines, respecting the breakouts, and previous resistance turning to support. This is just pure textbook setup. So taking it down to the H4 time frame, you find out that yes, exactly where we anticipated this correction is at the 62% Fibonacci ratio. I will be showing you that. Let me pull out the fib tool here. So taking a look at this from the last low to the last high, just as it got to the 61.8 fib ratio level, we began to see this retest of previous resistance level. I told you guys on Monday, my view for dollar is that we should be breaking the last high, which is around the 114.64 level. So for traders that are looking, to still buy the dollar, this is a good opportunity. We're already broken past the 50 Fibonacci ratio, and I believe this will continue higher and higher until we see a new high created. Okay, so this will set the precedence across many pairs that are our favorite major pairs trading in the forex market. Now let's look at oil. On Monday, Sunday rather, when we did for a trade review starting the week, I told you to anticipate a retracement into this level. We got into that level, but we can see that there was an extension into this because OPEC Plus decided to cut production, and we saw that affected the market by increasing oil price and we see the rally. Well, I don't believe oil price will break past the 89.44 level. I'm expecting that from this level we'll begin to see price trade back. Now, let me show you a bigger picture of what oil looks like on the daily chart, maybe probably even the weekly chart. You can see here that oil is structured to the downside. We saw how price was unable to break to the last high. You see this, and then we began to break the last low, and then oil now was fully set up for a bearish run. So I'm very bearish on oil despite the rallies that we see. And looking at the H4 chart, you see that it's clearly showing that we are structured to the down side of the market. Now let's look at so I will be selling. Let me see, I will be waiting for the breaking structure. In maybe subsequent videos I will be showing you exactly how to find your trading setups. I mean, to find your entry point when there's a breaking structure based on the analysis how I present it to you. So let's look at the next pair, NZD USD. That's the New Zealand Australia United States dollar. Now this is a pair I showed you. We structured to the downside, we broke the channel, and I gave you the target, which is to the 0.5479 level. We're pretty much headed to that level. Now watch out how price respected this level I gave you guys in the beginning of the week. Price has not broken past that level. Now this is what I would expect. What we see here is called a flag in the forex market. So price, and it's a continuation pattern. All right, you see price make a descent and then it consolidates a bit, then it has to break out and continue in the direction of the previous trend. So what we expect to see here is a breakout from this flag pattern, and price descending down to our targeted profit level, which is the 0.5479 level. If we see price break through this, then we'll see another drop to the 0.5317. Don't forget, guys, I've been warning that we will see price drop to the last COVID lows, and that is exactly where I see price headed at the moment. So I'm really short or bearish on NZD USD as we continue into the last quarter of 2022. Now, Australian dollar, United States dollar. Now, this is a very good textbook setup. You can see here the price, traveling on the channel down pattern. We see the breakout, then we see the consolidation. Now, what do we have here? If you've gone through any of my courses on the intermediate course, okay, this is textbook bullish wedge, okay, or rising wedge. So you see the breakout, you see the rising wedge, and now we're expecting the breakout. I think this is already happening. So we expect the price will travel down to our next target. So our focus pretty much for the week has not changed. All right, hasn't really changed. It's just that we saw lots and lots of consolidation, a lot of panic in the market. Is the dollar correcting? It has the dollar turned bearish. Well, I told you guys, I expect dollar to be bullish into the last quarter of the year, but we'll see. Anything can still happen. But for Australian dollar, USD short term, we're still bearish on this. We see the breakout, we see the rising wedge, and we're seeing the breakout from the rising wedge. So guys, to trade this, just take a distance measurement of the base of the triangle, and if you extend that to the breakout point, you see that pretty much we're close to our profit targets towards the 0.62140 level. All right, so let's look at United States dollar, Canadian dollar. Now, I told you guys that I'm bullish on this, but as it were, um, this wasn't one of my favorite pairs. Why is it so? Let me show you what's happened on the daily chart. Now, I traded this pair, and we rode this bullish breakouts all the way. All right, I took very nice profits from this trade. Now, I need to wait. What you see here is an expanding triangle. You see that it's also a continuation pattern. So I believe the breakout from this expanding triangle will see price even rally further. So this is not one of my favorite pairs. Canadian dollar being a commodity pair. As oil is rising, you saw how it pushed the United States dollar down. But right now, dollar is gaining back strength, and I believe oil will begin to fall again against all odds with OPEC Plus cutting production. I believe all commodity pairs will still drop against the major safe haven assets or currency pairs that we have. Now let's look at Euro USD. Now Euro USD, wow, this is really interesting. Now let me show you this. Guys, from the beginning of the week, I told you we're anticipating price to consolidate within this level. I was believing that this was the last high before we had the break. Now, you saw how much this extended. All right, I didn't expect that price will rally past this, but then, well, it's the forex market. You see how it extended. Now, taking your Fibonacci ratios, taking from this last swing high to the last swing low, take a look at this price retraced to the 61.8 fib ratio level, and it respected this. Now in subsequent videos, so do well to subscribe to this channel so you can know when I post that video. All right, I will be showing you exactly how to trade this setup using Fibonacci to find your perfect entry. Now this is a trade I took, and you can see how price this is already giving me over two ratio risk to reward, 1:2. And we also see a break in structure here. Let me take you to M30 so you can see exactly how this is panning out. Now take a look at this. This is bullish structure, and we're already seeing the failed swing here. You see price has already broken this part, so we expect more sell-off on this. So this is a very fantastic trade to close the week on. GBP USD is still another fantastic trade. Price from the last high, swing high to the last swing low. You see price retraced well above the 61.8 Fibonacci ratio levels. Well, I gave you the levels to be this place, yeah, which is also corresponding to the 61.8 fib ratio. But you see how price still extended far above that 236 level. Well, anyone trading GBP after the crash, where the Bank of England had to intervene for the pension operators not to face margin call, they had to intervene, and we saw the pounds rallying back up. Well, I don't think that will last long. The market forces always determine the price. So we see price was unable to create new highs, so I'm still very much bearish on pound sterling against the United States dollar. So if you take this to the lower time frame, you see that we are almost seeing a break in structure. All right, let me take this a bit higher so you see. So we are almost seeing the break in structure. You see the breakout, you see the retest. So this is also a nice trade. Set your good risk to reward ratio, target all the way down. All right, for traders. So probably I believe NFP will come out positive, and it will push pound sterling down. Now let's look at Ncg Swiss Franc. Ncg Swiss Franc, we see on the daily chart, we've been on a channel down pattern for a very long time, and we are almost hitting the last COVID lows of 2020. Now, what does this hold for us? Traders, you have to be very careful with this, because don't trade this with any loose or tight stops. Now, you see the profit targets where I'm targeting. So what I would like to see is the price will break this structure that we have here. Now take a look at this really fantastic textbook setup. This is a double top pattern. Take a look at this, 1 2 3, and then we also have here 1 2 3. All right, so price breaking past these triangles, all you need to do is take a measurement to the neckline, and do this, and you get your next profit target. Okay, that intermediate profit target, you see exactly this point. So I'll leave that for that as you trade this. Let's look at Australian dollar Swiss franc. Now this is another interesting pair for me. We looked at how price rallied way up. Well, from the last high to the last swing low, it still found resistance around the 61.8 Fibonacci ratios, which is corresponding to the upper boundary of the channels. So what does this hold for us? I will be still trading to the downside, so just watch out for the break let's watch out for the break. Now this has already moved way good, really good. So for those that wanted to trade this, I think we've really gone far away from a good entry point. So this was the target I gave you from the beginning of the week, 0.6220. We already see price approaching that level. So in case you entered this trade and you're still holding on to your trade, why not? That's really good, because I believe price should break the last low. I told you guys from the beginning of the week, Swiss franc is one of my best pairs, and I paired you up with Ncg Swiss franc, AED Swiss franc, and the next best pair for the week I showed you was CAD Swiss franc. So let's look at CAD Swiss franc. Now on CAD Swiss franc, look at this. So we've really extended much higher than where I anticipated we'll see the correction into. But then if you take the fib ratio, so sometimes market plays this out. We extended well far above, you know, the 61.8 fib ratio, but yet we were unable to break the last high. So this was the last high, as you see here. This was the last high. So right now we're headed towards our target, at least the last low. And when we break that, this is exactly where I gave you 0.7056 level will be our next target. Now let's look at NZD JPY, NZD Japanese yen. Look at that drop. We see the flag. This is textbook trading. So just wait for the break and trade into the 79.52 level, guys. Okay, and Australian dollar, Japanese yen. What we have here, this level I gave you from the beginning of the week. Look at how hard it held. It held really strong. Price found great difficulties breaking past this level. So we see the drop, then the flag, wait for the breakout into the next level, the 90.60 level. So traders, this is another very good trade. So unfortunately it didn't play out at the beginning of the week, but I think next week this will be one of our best trades for next week. Canadian dollar, Japanese yen. Canadian dollar, Japanese yen. For the week, I believe that this pattern will hold strong and give us an immediate break. So I told you, let's expect a retracement into this level. But look at this. This is Forex. Price broke past this level, and right now it's giving us, I think this is even, what do you call it? This is head and shoulder pattern. If you look closely, just a moment. Just a moment. So this is the textbook head and shoulder pattern. So look at this. Created a new high, and this is the right shoulder. A break from this is already giving us the profit target, but then my view on Canadian dollar, Japanese yen is a break towards, at least price should drop back to the last level of low, 104.57, and a break from that should give us 102.64. Canadian dollar being a, what do you call it, a commodity pair, Japanese yen regaining its status as a safe haven asset, I don't believe Canadian dollar will outperform the Japanese yen. So I'm still fully bearish on this pair. Fully bearish on this pair. So let's look at gold. Gold is really nice. I already have some trades on gold, and I'm bearish on gold. Now let me show you the big picture of gold. Now gold, of course, from the beginning of the week I showed you all of this. We have a failed structure. This is double top pattern, and we broke the neckline last week. Now what we have on the H4 chart, you see price has been structured to the downside, and looking at the last high, so price broke this high. Anyone could have gotten confused. Oh, are we now in an uptrend? So it means when price breaks this high, it means we're taking our new high from this level. Okay, we're taking our new high from this level, and so it means that we will look to, since price wasn't able to break this high, so it means we're still on a downtrend. So guys, this is where I'll be closing it. So watch out for the breaking structure. Watch out for the breaking structure. So I'm just waiting for price to break this level, the 1700 level, and this will be a confirmed sell. So happy trading, traders. I trust you make money at the release of the NFP news. Have a great trading week. Bye bye.